Hey everyone, me Kevin here. So this morning, a new tax on real estate was just imposed out of nowhere, and this affects everyone who owns real estate. Here's exactly why. Most of us, when we own real estate, we look at real estate as a piggy bank, and this makes sense. It's an emergency fund. We can build our wealth by paying off our loan. We can build our wealth by, in the future, if interest rates go down, we refinance. If interest rates go up, we're locked in for 15 to 30 years. Real estate is a phenomenal investment, and we seek to grow our equity and our security in our investments by having more real estate. Well, here's a big problem. Anybody who now wants to refinance just got slapped because of the pandemic. And this is really frustrating because when the pandemic hit and the Fed frantically dropped interest rates, I instantly refinanced 4 properties. Well, I instantly started the process. And refinances, I wish they were instant. I did that on March 6th. I'll never forget that day. Panic from the Fed on Sunday. Monday morning, I refinanced. And as soon as my money came in, I started buying stocks at the beginning of April, end of March, which was awesome timing. But that goes to show the power of what we can do when we can refinance. We take our money that's sitting around in equity and real estate, and we can use that money to go fund future deals. We can go buy stocks, and heck, if we wanted to, and I don't recommend this, we can go buy a boat. Like, there's a lot of stuff we can do when we own real estate and we build our equity. This is why I feel like anybody who owns real estate is like, yeah, I like real estate. And people who don't own real estate are like, oh, no, I don't want to deal with real estate. But it feels like a best kept secret, right? Real estate is freaking amazing. Well, apparently it's so amazing that Fannie Mae and Freddie Mac took it upon themselves to slap us across the face with a new tax. And again, this affects everybody who's refinancing. I'm going to break this down in detail here. Just a quick note in terms of who this affects, kind of like everybody. Because think about it. If you buy a house and rates go down, you want to refinance. You buy a house with mortgage insurance, sometimes you're like, oh, I got so much equity in the house after 6 months to a year, then you refinance. Some investors pay cash for a property and then refinance. Some investors buy a property with a loan, they fix it up, and after a year or two, they increase the value so much they refinance and they go do more business. They go fix up more properties. All around, we keep money flowing in real estate. Well, here you go. Fannie and Freddie decided, you know what? We're gonna punish the people getting refinances. Here's the press release from Fannie Mae, and I'm gonna explain this in detail. There's also a press release from Freddie Mac, which means if you are getting an FHA or VA refinance, this does not affect you. Although I don't see a lot of people doing FHA refinances because you have permanent mortgage insurance. So it's kind of like, why would you keep permanent mortgage insurance? And I'm not saying like private mortgage insurance. I get it. It's the same acronym, PMI. I mean, permanent mortgage insurance. Like you can't get rid of mortgage insurance on FHA. Anyway, here you go. This is the sheet. Fannie Mae lender letter released yesterday, August 12th, effective essentially today, in light of market and economic uncertainty, resulting in higher risk and costs incurred by Fannie Mae. We are implementing a new loan level price adjustment. The terms of this loan level price adjustment are described below. Limited cash out refinances. Folks, that is a fancy way of saying all refinances, because a limited cash out refinance is basically a regular rate and term refinance where you're allowed to take out a few $1,000s. It's not much. If you want to take out more, you have to do a full refinance, a full cash out refinance, that is. And the only loan that's exempted from this is if you have a construction loan and you're going to like permanent financing, they don't consider that a refinance, even though it's technically replacing one loan with another loan. So that's the exception. But otherwise, anybody who refinances is going to get slapped with an additional 0.5% fee on your loan amount. And this affects loans purchased on or after September 1st. Now, if you think you can quickly do a refinance now, it's already too late. The lenders are already pricing this in. Why? Because it says loans purchased after, which means if you started a loan today, come on, the loan's not gonna get sold until after September 1st. Freddie Mac has a very similar press release. It's the same thing. Here's practically what this means for you. Let's go ahead and pull up a good old calculator here and show you exactly what this means. Let's say you own, or let's say you bought a property for $400,000 and you put 10% down on the property. That means you've got a loan for $360,000, right? Well, now you want to go ahead and refinance because you got a wedge deal. Just like I talk about in my real estate investing course or my course on the psychology of money, you want to buy real estate below market value. But now you want to go refinance because you bought a $400,000 house in a $500,000 neighborhood. Great. So you put 20% down on that $500,000 property, which you already have in equity. That means you're going to get a new loan of $400,000. So if you get a new loan, this fee is based on the loan amount, not the price or value. If you get a new loan of $400,000, you are going to have to pay an additional fee of 0.5%, which is about $2,000. It's not huge, but that's $2,000 more in closing costs you basically got. And I mean, like, in my opinion, that's a lot. It's like a reverse stimulus check, you know? Where it really gets painful is, let's say if you really become a real estate investor and you're starting to get multiple properties, and then you go ahead and say, hey, I'm gonna refinance 4 $400,000 properties, and then you're getting hit with this extra 0.5% fee. That's an extra $8,000 just to do refinances, just to help with the COVID pandemic. Now I get it, it's basically just a tax, but come on, another $2,000 on an average person's refinance, it's already expensive enough to pay escrow, title, loan fees, appraisals, appraisal requirements. This is frustrating. It's a slap in the face on the real estate market, and I think they're doing this because, oh, well, real estate's doing great, so they can pay some more fees. To me, it's a reverse stimulus check. It's like literally like, on one hand, here you go, here's a stimulus check, people, and on the other hand, they're taking it right back and they're taking more money back. It's very, very frustrating. So in my opinion, this hurts people doing the BRRRR method. It hurts homeowners who want to be able to tap in their equity. Obviously, if you own a house cash or you keep a loan for 30 years, it doesn't matter. If you purchase a property, it's not going to affect you. It's just going to affect your refinance considerations in the future. So keep that in mind when you're thinking about real estate. You are going to see your fees tick up a bit. This probably translates, if you wanted to just take a higher interest rate, you could probably offset this about $2,000 fee by taking an interest rate of about 0.25% higher. So here's how that looks if you wanted to get rid of that $2,000 fee. Just to save you some quick time, I basically pulled up a mortgage calculator here, and a $400,000 loan costs about $1,852 at 3.75% fixed for 30 years. And here's what it would look like afterwards, potentially, if you wanted to offset those $2,000 in fees from this refinancing thing. If you wanted to get rid of that $2,000 fee, you'd probably, and this changes all the time, but you'd probably have to bump up to about a 4% interest rate. So that's gonna cost you somewhere around $58 per month to be able to get rid of that $2,000 fee. That sucks. I don't know. It's frustrating to me as an investor. It's expensive. Portfolio wide, I'm gonna be doing another 4 refinances here coming up within the next 2 to 3 weeks. That's gonna cost me an extra $10,000. So very frustrating in my opinion. But anyway, there you have what's going on, what the details are, what you need to know. If you're going into refinances now, keep that in mind. If you are thinking about refinancing to get rid of mortgage insurance, realize it just got more expensive to refinance. That's all this is. It's just a straight up slap in the face. Here's some more taxes for you. There you have it, folks. Thank you so much for watching this. If you appreciate this kind of content, make sure to subscribe. I know the real estate content doesn't get shared so widely, but I would appreciate if you consider sharing the video. Check out the courses in the links below, and folks, we'll see you next time.